Ladies and gentlemen, I hope you guys are sorry for the inconvenience. I think people were confused about the time. We were supposed to had changed the time to 7:30 a.m. instead of p.m. I think I forgot to inform the group members. So you guys should know that our technical analysis class will be always on a Monday and a Wednesday, starting at 7:30 a.m., not p.m. as it was before. Yeah. Then for the Saturday class, where it is mostly full of question and answer session, shall be starting at 8:30 a.m. to about 10 a.m. within that period, where we shall be basically interacting and asking a few questions here and there and having answers to them, just generally having a chat on that session with regards to anything that we will have covered in the course of the week. Yeah. So sorry for that inconvenience, but I hope we have corrected that. Please mark it on your calendar. I don't think we shall change it again unless otherwise, but I will always keep you informed in case of any change. Yeah. So I hope my voice is clear. Yeah. I hope I'm audible enough. Yeah. Very clear. All right. So let me share my screen and we get started. So in case my voice goes down, please let me know. Or in case I have network issue, you let me know also. Yeah. So that I don't speak to myself alone, right? Yeah. So, okay. So in our previous class, I think we looked at types of trend line, and we said there were basically 3 types of trend line. There is what we call the sideways trend line, and then we have the uptrend trend line, and then we have a downtrend trend line. So we started by looking at the sideways trend line, which I think we pretty understood, and we demonstrated it practically on the chart and how you can go about drawing these trend lines. And in our summary at the end, when we were looking at the sideways trend line, we said that the sideways trend lines are actually the support and resistance we normally draw horizontally on the chart, by connecting higher highs to form this resistance lines or area or level, then by connecting lower lows to form what we call the support area or level. That is in summary. So it's the common form of drawings that all of us know. When we talk about support and resistance, what goes to our mind is the horizontal trend line, right? Now, yeah, so, but of course, there are other 2 more types, which we call the sideways. I mean, the uptrend line, or trend line. Now, in this case, this is a form of lines which you actually draw diagonally, right, across the chart. You draw it diagonal across the chart. Now, an uptrend trend line is that trend line you draw to monitor a rising trend or a rising price in the market. So you draw this objectively, and why I call it objectively, because you don't subject your thinking while drawing these trend lines. You draw it objectively. You don't force it. You don't force what is not supposed not to be there to be there. So if the goal is to draw and monitor the rising trend, you are supposed to draw it objectively, right? And when I mean objectively, it is objectively, yeah? So you draw it objectively, diagonally, as a single line. You draw it as a single line along the lower points, when the market is rising. Now, how do you draw this? You draw it by connecting 2 or more higher lows. right? So you have to connect 2 or more higher lows. Now, once you do that, you'll be establishing what we call a support level or a support line on the chart. Okay? So what this would definitely mean therefore that for as long as you've already drawn this support line, it's up to you to monitor how that trend is going to go along, how it is going to continue rising. Yeah? So for as long as that price is being maintained, is being supported, okay, for as long as the market price of that particular coin is trading above your support line, you would be having a confidence that the price is continuing to rise. The price will continue rising. So as long as it comes and touches on your support line or your diagonal trend lines on that rising trend, so as long as it touches on it and reverses to the upside, you know, when this is your, when you draw it, when you have that moment, let's assume that this is now the trend line. For as long as the price comes and touches on it and reverses to the upside, to whatever point is going to stop, then it comes back again and touch on it, and then it rises again, comes and touches in and rises again. This support line will help you increase your confidence to remain longer in that trade. Okay, because you will be knowing that the price is continuing up. You get that? So it is very important that when you're doing the drawing, when you're drawing, you need to make sure it is objective, right? It is very objective. That's why I'm saying here that you have to draw it objectively, right? When you're doing that, you don't subject your thinking on it. And when you're doing that, take note that it is not a must that all the higher highs identified has to be touched by the line you're drawing, right? You may have a trend rising in that manner. Yes, it is rising. At some point, there are other candles that may not exactly touch. But all of, if you check through all this, these are all higher highs, right? In the course of the rising trend. However, when you're drawing your support line, you're not going to ensure that all the point touches. You are going to only identify key points, 2 or 3, all right? Then you just connect. For example, if you can say, I want to connect this part, and that part. If you try to draw, you're going to realize that, that in the process of connecting this point, you're going to have something like this. You'll have some line like that. Now you take note that this point has touched, this point has not touched. This point has touched, this point has not touched. This point has touched. So meaning you were interested in only connecting the 3 key higher lows. You get that? So that's why here I'm saying a note that it is not a must that the trend line must touch all the higher lows identified. No, just identify the key. As long as it can touch 2 or 3, it is okay. Now, to some other instances, you may have the price rising, and then this line, I mean, the candle comes and even dips below like that and goes up. But the most important thing is identify which are the key higher lows, because this one sometimes may be as a result of market manipulation. You know, probably in the process of the market price dropping, it dropped with a lot of momentum and it had to break below the support. But then afterwards, it immediately came up and maintained the trend. So sometimes it is as a result of some of those pressure, those selling pressure, that will have an effect on the dropping momentum to cause the price to drop below the support. But you cannot confirm that the price has reversed until you see what happens next. But in the course of this kind of trend, you see that indeed after dropping, it really had to go back up and maintain the the trend was maintained. You get that? So it is not a must that all has to touch. I hope that part is clear. Then the second note, that after connecting the high, extend the line to the future. Now, what does it mean? What you're trying to do is analyzing the future market price movement, not current market price movement, not the previous market price movement. Now, what do I mean when I say that? If you draw your trend line like this, let's assume this is the trend is on a rise like this, right? It's from here into retraces, then breaks structure, comes back retest, breaks structure, comes and retest, and it is on the rise in that manner. So of course, this is a break of structure. These are breaks of structure that brought about the formation of new higher highs. Because normally once the structure is broken, a new higher high is formed. Right now, this let's take it for instance that these 2 points are the key higher lows you have identified so far. What you're going to do, you will connect these two like you have done, then the line is going to be extended to the future. You have to make it longer. Let it surpass the market price. Let it go past the market price, because you are interested in seeing how price is going to continue faring on your support line. So let it proceed to the future, because at the moment, this is where the current price is. So you want to see what will be the next movement. What the next movement is going to be. Is it going to continue maintaining this trend by coming on the support and being, supported, and it reverses to the upside and continues? Or there will come a point where the price will come back and break below the support, confirms, and then the reversal is confirmed. So that's what you want to see. You get that? So as you do that, two things must be taken into account. One, make sure that you identify and connect only the key higher lows. Very important. Then two, as you do that, make sure that not all the higher lows are touched. Just make sure the trend line touches on the key one you have identified. If there are others that goes past or below the line, it is fine. If the others may not come and touch the line, it is okay. Because when you're talking about a support, we are not only looking at a line, we're looking at an area, right? Right, so it's an area. So the third thing is, make sure you extend the line to the future. Whatever kind of trend line you're drawing, be it in a sideways market or in a rising market, make sure you extend it to the future. Even in the down trend market, you make sure you extend it in the future, because there is a reason. All right. So when you do that, how does it appear on the chart? Before we can go and demonstrate it on the real chart. Now, this is how it looks like. This is how you will be drawing your trend line. So assume this is the rising. Let's take, for instance, that this is the rising market. You see that we have identified the first higher low here, the second higher low, and this is the third higher low. But at the same time, if you look at this kind of movement, you realize that when the price rose to this point, it had to retrace. And this time it did not come to our support line. Then it had to continue upward after breaking that structure. Then the next time it had to come back to touch our support. And it was successfully supported, and it had a reversal to the upside, and it went slightly up, came back, wanting to come to the very support, but then the momentum was gathered sufficient enough to cause a rise after the break of structure. Then the next time it came back again and touched, now it is on the verge of rising. So what you're interested in is, how is the price reacting once it approaches this point? If it comes and it gets supported, if you had entered from somewhere here, probably, and you see this kind of event happening, your confidence is increased. If you wanted to exit the market, you say, okay, let me stay a little longer. Maybe the price is still rising. As you keep watch, because anytime anything can happen, the market price may come crashing and breaks below your support, and then retest, and there will be a reversal in the trend. So you also, as you do that, you take into consideration the movement. You will only remain in the market if you see the price is supported. But the moment you see a break of structure is happening, take whatever you want to take as profit, which you accumulated right from the point of entry. Because if you fail, the price is going to come back against you to the very own starting price, and then goes below that, and that will be hell. You'll be going into a floating loss. Okay, so take what you can take. Avoid greed. That's what we always preach about when we're talking about trading. The greed must be minimized. Take whatever you can take, move on. Wait for the next entry opportunity, enter, take whatever you are taking, move on. Right? Okay, so that is how it will appear on the chart after successfully drawing your trend line in a rising market. Now, sometimes you may wish to draw a channel. You may want to monitor the rising trend within a channel. Now, in this case, when we talk about a channel, you're now bringing the aspects of both a support and resistance line all being incorporated on the chart to help to aid in your monitoring, right? Now, why would you include in the resistant aspect? The resistant aspect will come in so that you are able to identify better your exit points, right? You want to identify better your exit points, right? So when you want to draw a channel, after drawing this successfully, the next thing is you're going to identify your key swing highs or higher highs in the course of the rising trend. And then you connect your line. So that line connected or created becomes your resistance line or your resistance level. So that you know that in the course of the rising trend, if the price rises here and it stops around somewhere there, you will put at the back of your mind that, okay, this should be a resistance level. So the next time it is coming back to the support and to get supported successfully and you have a reversal, you are certain that the next movement will be around the previous resistance. That is where you're going to take profit too. You get that? But if it breaks that level, it is okay. It is okay. That means the next resistance level will be created. Once the next resistance level will be created, which is in this case a higher high, a new higher high that has been formed, it gives you the next take profit target in case the market price drops and gets supported. That means after it getting supported here, you are sure that if you enter at any point, your next exit point will be the previous resistance, which is resistance 2 now. If it breaks above, well and good. That is creation of another higher high. So if the market price reverses again and gets successfully supported, as it is on the verge of rising, you enter from any point, take profit to the next resistance level. So that is the essence of drawing the channel. So you want to monitor through how the price is faring within your channel, right? You get that? So that's what you would wish to do. You would wish to monitor through the trend, okay? So that is very important. Just a minute, guys, and I'll be back. Just 1 minute, and I'll be back. Just a minute before we can continue, and I'll be back. All right, I'm back. Okay. Still okay? Still fine. Let's let me see some a one on the chat if you're still fine, if you're following, because we're about to go on the chat, but we shall look at both the uptrend and the downtrend as they go. Then we go and demonstrate it on the chat practically. So yeah, if you're still fine, yeah, that's amazing. Okay, if we are still okay, that's good. That's good. Okay. All right, then we can proceed, right? Yeah, we can proceed. Okay, so taking you back to the chat. So I hope that is very clear. So Now, the next thing is, as I'm making it in summary, that if you can draw this trend line on a rising market, either as a single line, which in this case you'll be concentrating in only how the price will be reacting on your support line you've drawn, with the intention of seeing how far the price is going to rise before it reverses, in which case the reversal will be ascertained by the price breaking below your support, retesting it, and then having that continuation in a downtrend. That's how. So you're drawing that as a support to just see how the price fares. Two, you can draw it as a parallel channel, which in this case you'll be drawing both support and resistance. And the reason is you want to see how the price will be faring within your channel, right? How the price will be establishing new higher high after break of structure, and then new higher low after being supported, like that, in that order. Now, in general, the essence of you drawing this support line has been summarized in this way. One is to monitor the progression of the trend, right? You want to monitor the progression of the trend, how the trend is progressing to that upside, right? You want to monitor. And the monitoring of that trend is characterized by multiple price support level, like I've just shown you. You realize that the price is going to be supported multiple times. Like here, it was supported. That means after being supported, the price will be rising off from the support. The next time it comes and gets supported, the price will be rising off the support. That means this is another confirmation that the trend is progressing. Where? Upward. The next time it gets supported, there will be a rising price there. So this is another confirmation. So the progress of the trend is ascertained by multiple support. That's what the statement here means. Okay, it will be ascertained by multiple support. So it is characterized by multiple support. The next thing is you want to identify trend reversal possibility. Trend reversal possibilities to the downside, because you are monitoring a rising price or a rising trend. Now you want to look out for, if at all there will come a point where the price is going to reverse to the downside. And what ascertains, what brings about a reversal to the downside? I told you here that it is characterized by, one, the resistance from the resistance line on the parallel channel. You'll have a resistance up there, then the price is going to reverse to the downside, and then a subsequent breakdown or a break of structure below the support. Now, this is what I mean. If I can go back there. Here, what happens? This is what I mean, that a trend reversal possibility to the downside comes about when the price rises and gets resisted there. Then we have a reversal to the downside with the intention of thinking that it's going to be supported, which in this case it does not. Then it comes and breaks below this support. Then once it breaks below the support, and then it comes back and retests, and then continues down. That will be a trend reversal. It begins with a resistance, then subsequent breakdown or break of structure below the support, and then there will be a retest. A retest is the confirmation of the price of the trend reversing to the downside. And what happens is, this scenario here, normally, this scenario here is characterized by a red candle opening from above the support and closing below the support. That is a successful breakdown or break of structure below the support or to the downside. Then, of course, we shall have some buildup of some green candles here to come back to wanting to retest. Then once that is successful and on retesting the level, then you see another subsequent series of red candles, which will result into break of this structure. Because once the price comes here and gets supported below the previous support becomes a resistance. This becomes the new support. So that means it has to come back to retest the resistance before it can come and break below the support to have a true and a new change of direction. All right? Okay, so that is that. So that's what that statement meant. So I want you to take that very seriously. And then the third thing is, after drawing this support, the next thing you're interested in doing is to identify entry opportunities. You want to identify areas of entry in the market when you are supposed to actually enter the market. When do you want to enter the market? Right? At what point? So when you draw the support and resistance on a rising market, you are able to know when you are supposed to enter. And when are you supposed to enter? There are two key points. You enter or you make entry decision in a rising market. One, at a point of reversal within the support area. And two, a break of structure above the resistance. This is what I mean. If you come back on the rising channel, what happens here is you will only enter if this price is supported successfully on your support line or your trend line. The price comes, gets supported, and then you see the price rising back up. You will enter at support or area nearer to the support. That's the first. So first entry within this area, second entry within this point, within that point, within that point, within that point. That is entry opportunity. You're making up decisions to enter the market within this area at a support line or level or area within the support line. Cool? Right. So what happens and what brings about that? Of course, it is confirmed by some candles, some candle patterns. Well, like for example, if you check here, this was confirmed by the hammer, formation of that hammer candle. So it gives you confidence. Okay, the price, this should be, it is not, but should be a reversal point. It should be the end of this movement that I was seeing, that downtrend movement. So by formation of this, it's already a buying pressure candle. It's a buying pressure candle. And because it is a buying pressure candle, it is actually signaling something to you as a trader that, you know what, either the trend has come to an end or it is about to come to an end. So be prepared for an action because the price will now begin rising. That's a buying pressure candle. Right? Another one here, you see this scenario? This is a bullish engulfing. You have a red candle being engulfed by the green candle. In this case, this is a candle pattern. It is also a confirmation. It signals something once you understand this, that you know what, the trend has come to an end. So be prepared for an uprise. You get that? Same applies to this bullish engulfing. You see, these are multiple candles that can give you a confirmation. So you enter support or area nearer to the support. That is the first entry point. First entry point. Could you mute yourself if you find yourself in the noisy area? Because I think mine is a little bit quiet, so I guess yours should equally be a little bit quiet. Yeah. All right. The second entry point is, we said, when the price breaks above the support, the resistance, sorry. When the price breaks above your resistance level. Now, this is the rising market, the price coming up, and it is resisted here. Then it comes down. The next time it rises, gets resisted, comes down. Rises, gets resisted. Now, the next opportunity that will come if you want to enter again, if the price breaks above your resistance line. How does that come about? One, the following event must happen. A green candle or a bullish candle must open from below your resistance and close above. A green candle or a bullish candle should open below your resistance and close above. Then there will be another candle, a confirmation candle, that must open above and still close above that resistance. That is a confirmation candle. It will open above your resistance line that was broken, and then it will still close above that resistance line. Right? So that becomes a confirmation candle, and then you can now ascertain that, okay, I think I can enter somewhere and ride above that price rise, or rise in the course of the price rise. So that is the next entry opportunity. So the first one is within here. The second one is when a break of structure happens. That's the next entry. All right. Lastly, Why do you have to draw this support and resistance on the chart? Number 4, to identify possible exit point or area within the market. Now, what are these possible exit points? Of course, you know it is the resistance line. Where is it? Okay, those are the possible exit points. Just a minute. I think. Fortunate, can you please mute yourself, please? Mute yourself, Fortunate. If not, I remove you from the group, I mean from the class. Okay. I think we take heed. I think we should learn to take heed, please. Let's always follow instruction. Otherwise, it will affect our class. I try so much to be off from where the noise is, so I guess we should equally do the same. All right. So, as I said, the 4th point of why it is important for you to learn or know or draw the support and resistance lines on your chart is to identify possible exit points. Which possible exit points are always at the resistance line or area. That is very simple. If you enter a market, if you enter somewhere, from whatever point of entry you're going to make, as a trader, you don't go blindly. You should be knowing what your target is. And the target is normally to the most recent resistance line or area or level. You're not going to assume that the price is going to break successfully. No. What you're interested in is, can I first take this? Then if a breakout happens, I can enter again and take another. If you know very well that now this is your resistance, this is a resistance level, extend it to the future so that at any point of support that you're going to make entry from, take your profit to this level. This will be like your future reference point of exit. If it was resisted here, mark that point, mark it with a red color, extend it to the future, because that is the possible point of resistance again. I give a simple example. You see, even on the chart, I don't have to go very far. You see, at this point, this was the resistance. And from what I told you yesterday, that any resistance on a diagonal trend is the same as a resistance horizontally. At that point where the price is rejected, even if you draw a horizontal trend line, it will still act as a resistance. So you don't take it for granted. You know that the next point is, if the price reverses and gets supported successfully here, if you make a decision to enter, take your profit to this level. That is a level. And indeed, you see here what happened. It didn't reach the other one, but it came back. Then the next time it had to go above. So meaning from whatever point you're going to make entry here also, that was key. That level was key to you, was key in decision making to you. Together. So that is very important, very, very important for a trader like you who is making entry. So we are not doing this in vain. There's a reason why. Now, lastly, when we look at the downtrend, it has the same concept, definitely. But unlike an uptrend, for a downtrend, you can as well also draw it as a single line, or you draw it as a channel, meaning you're taking consideration of drawing both the support and the resistance in a dropping market or a downtrend market. Now, when you're drawing a trend line as a single line on a downtrend market, what you do is you connect the lower, you draw it, first of all, you draw it above as you connect your lower highs. You're connecting 2 or more lower highs together. You connect them in the course of that downtrend. You're not going to draw it from down like we did on a rising market. In this case, we draw from up, meaning actually what we are drawing on a downtrend is a resistance line. If we are using as one online only, we are drawing a resistance line. What we are drawing on a rising market or on an uptrend, when we're using one line only, we are drawing a support. Support on a rising market. On a dropping market or a downtrend market, we are drawing a resistance. If we happen to use only a line. But if you are using a channel, that means we are taking into consideration both support and resistance on either direction. Now, when you're drawing it on a downtrend as a single line, you connect two or more lower highs to each other, and then you extend it to the future. So if this was the dropping market or a downtrend market, and this is where the price is, when you're drawing, identify your lower high, right? This is another lower high. That's the first thing. Then two, connect any two that you think will be lines that you think will establish for you lines of best fit, like, you know, it will really appear nice on your chart. So you can decide to pick this and this. Then you just connect objectively, don't subject, objectively. The one that will not touch, leave it. Don't stress. The one that touches, it's fine, right? Because you may have a scenario where even this one comes a little bit up and then goes down. So this is also a lower high, but because it is above it, it is okay. This one is also a lower high, but because it is below it, it is okay. For you, you have drawn your two. Okay? So after drawing this, what you have established is a resistance line. So the interest is you want to see how far is this market going to go? How far is the price going to drop? Because every other time it wants to rise, it is rejected. It is pushed back down. Every other time it attempts to come and rise, it is rejected. It is pushed down. So how far is it going to continue going down? That is the interest while you're drawing a resistance line. So you're extending it to the future so that you monitor how is it going to continue faring. In the future, is it still continuing? Is it going to still obey this resistance line forever? Or there's going to come an opportunity where it will now break above the resistance, right here, and then we have a reversal to the upside. That's what you don't know, but that is the interest. You want a breakout to happen because for you as a trader, you want a rising market. You want the price, you want to enter so that the price can rise and you take profit. But you cannot just enter blindly. You want to be sure. You have to be sure. At least you have to have some certain level of degree of certainty, okay, before you can make up a decision to enter. So you are monitoring because you want to buy at a point where you feel, at this point when I buy, I'm not going to take long before I begin riding in profit. All right. So that's why you're monitoring a downtrend. Right. So as I said, it is important. And why? As you do that, two things must be put to mind. One, not all the lower highs should be connected, and not all the lower highs will be touching your support, your trend line or resistance line you've established. All right. Not all. So when you draw it successfully, this is how it will appear on the chart. Very nicely. Very nicely drawn. It will appear very nice on your chart and neat. So in this case, if you see this rising, this downtrend market, you see that this was a lower high. This was a lower high. This is also a lower high. This is equal a lower high. This is a lower high. Same applies to this, and this. But do you see what this trader did? What happened here was this line was drawn. This line was drawn specifically to connect this lower high to this and this. This one the line didn't touch. Why? Because it was slightly below. Same applies to this, it didn't touch. It didn't touch. But if you are taking into consideration of an area, then that means all this have been taken into account. all of this area have been taken into account. It is key. It becomes a resistance level, a resistance area. It is key in causing a reaction of the, to the price. A reaction of the price once it approaches it. See that? The whole area is covered. But if you're talking about a line, then that is it. You're connecting your lower highs to another lower highs to make sure the line is clear. And then you extend it to the future. So you want to monitor how is price behaving. Once it approaches, what happens? That means this is a very serious line that is rejecting the price to continue rising. You get that? So it is key. And when you go to the chart, what is the essence? Well, of course, you can draw it also as a support and resistance line, both lines. Yeah, but what is the essence? One is to monitor how far the trend is going to continue down, the progression of the downtrend. Two, you want to identify reversal opportunity to the upside. This time you want to look out for a possibility of the price going to the upside. You've drawn your line very well. The price is going down, down, down. Then an opportunity comes in the process of rising. It comes with a lot of momentum and it breaks above. Comes and retests the line and boom, it surges. This is what you're looking out for as a trader. Okay? And then to identify entry opportunity, same principle applies when you're identifying entry opportunity. You enter at support line, meaning you can enter from any point here at a support line in the course of the downtrend, or when the price breaks above your resistance like it has done, because it will be a good sign of a bullish sentiment. Okay, so that's what happens. So you entered support line or after a break of structure above the resistance line. And thirdly, exit points, same. Exit points are normally at resistance level. So with that said, just look at this scenario of a break of structure. The price was on a downtrend, attempting severally to break, but it is failing. Then finally, a break of structure happens here. Bam. The price breaks past or above the channel. It breaks out of the channel, comes back to retest the line, and boom, it is surged. See that? It has to, once it breaks, it has to come back and retest before it goes crazy. Okay, so that is how these two trend lines are drawn. Are we still fine? Let's go on the chart and make it practical. Are we still okay? Are we still fine?
Yeah, it's okay.
Okay. All right. So if you're still okay, let's go. Let's go and let's go on the chart and make it real. Okay, so all right, so let's, wow, this is a good one. Okay. All right, so let's go. So let me delete this off. Okay. So I'm going to take into, I'm going to pick this. Can I use this? So I'm going to begin with a rising market. For a rising market, is this a rising market? Yeah, is it a rising market?
Yes, that's good.
It is a rising market. So it is a rising market. So what are we going to do? where did the price reverse from? We look at the reversal point. So the price reversed from here, right? Right? Is that true?
Yeah.
Is that true? Yeah, so this was a downtrend. We can confirm it was a downtrend. Let's just confirm it. We had that. There was a breakout structure there, a retest before, you know, so that was a rising trend. So we're going to take consideration of this. This is a rising market now, because the other one was a downtrend. So we're going to pick this off. Now we're going to identify our higher lows because we are drawing our support. So we want to see how far this trend is going to rise. So the first higher low will be, because this will be a lower low. That is the point of a reversal to begin having this kind of uptrend movement. So then this will be higher, low, higher, low, higher, low. Is that true? The one we can visibly see are three, right? So we're going to draw our trend line. Take this. We're going to connect. So which one do we connect? We're going to connect two. We're going to connect this to this, right? Then we extend it to the future, right? Or we can decide to connect this, and that. You can pick 1 and 2. Or decide to pick 1
this is
and
very
2.
practical.
Okay? So let's pick 2. We're going to pick this. 1 and then 2. Okay? Yeah, so let's connect. So we're going to put it here. And then we connect that.
But what do you normally deal with?
Okay. All right. So as I said, we are connecting. We are going to pick 1 and 2. So this is higher low 1, higher low 2. That's the one we're going to take into consideration. So we have done that, right? Then we're going to extend it to the what? To the future. So we pick there and then we extend it to the future. Let's extend it to the future. So here, we don't care how far the price is going to go. For as long as it comes back and touches on our support line and it gets supported and reverses, that's what we're interested in. How the price is faring when approaching our support line. That is the interest. Okay? You've drawn it. If you want to do it as a, so you can extend this also, just somewhere here, okay? So if you want to draw it as a what? As a channel, that means you should also identify any 2 to 3 higher highs established. So we can see that this is 1, 2, 3. This is still going on, so we cannot take it as a higher high, right? It is still an ongoing trading session. So we're going to pick connect only this. So let's do that. I'm using this. Now, when you want to draw this, you pick another line and then put it there. Connect that. And then extend to the future. Okay? You can connect to the future. Right. So you have this as your resistance, this as your support. So you want to see how price is faring in between your channel. Now we see that it is already around our resistance. Now it may come back here. That means this level may reject the price, or if it successfully closes above our resistance, then we shall say a breakout has happened, meaning this green candle must, just like it has opened from below, it must close above. Then we are going to confirm this breakout when the next candle opens above and still close above. We shall say there is a break of structure here. So that means the price is now going to begin going above the channel. It will be trading again above the channel. So the best way of sometimes drawing this is by using this drawing tool called the parallel channel, because it helps in capturing those areas automatically. So if you use the parallel channel and I remove that, if you put it there like you have done and you tap on it, there's normally this middle part. When you draw a parallel channel, there's always the middle part, this middle part, which is like a circle. You have the circles this side, the circle, and then there's a square in the middle. When you tap on this and drag it upward, you will be seeing another line arising from it, and then it will be forming your resistance. So you just tap here, drag upwards. Let's do it. You tap on it, drag it upward, and you see a line emerging. That is it. So you're drawing that. There we are. So we can extend it backward a little and capture. Isn't that a perfect channel? Isn't it a perfect channel? It is. Now, with the parallel channel, the channel, the beauty about it is that you have 3 lines established at a go. You have a support, you have a resistance, but then there's also a dotted line in the middle, which is also a trend line. A trend line that captures those mini movements before the major movements. Like, for example, you see here that the price had to rise. The price rose from here and came down. That means this trend line here was able to support it. It prevented it from coming all the way to this major support. So it only stopped there and reversed back up to this major resistance, came back again, it was supported, rose a little, then this time it had to break and come below to the main support. In the process of rising here, it rose again, got supported here, rose, got supported before finally coming back below again to the major support. Then in the process of rising from the major support, it came on arriving here, it was rejected. So that means at this point, it was acting as a resistance, right? Then it rejected the price came back to the major support, and now this time it had to break it. Now it is back to the major resistance. So anything can happen in the next movement. It may either come back and get supported at this mini trend line, then it goes up, or it may come and break below it and come back to the major support. So the parallel channel is super because it helps in capturing those mini reversal points, those mini movements within your major resistance and major support you've drawn. All right? Okay? So saving that, when you come to a horizontal, to a downtrend, let me look for any downtrend. Let me look for any downtrend. Not coin super. Okay. Let me look for any downtrend market. Which coin is on a downtrend? Let me look at the gaming coins. Is there any AI coin on a downtrend? All of them are bullish. Okay, let me go to T Fuel. All right. I think let me use this. Yeah, this is a good one. This is a downtrend market. Right? So the first thing is we identify our lower highs, right? So this is a higher high, meaning the last higher high established before there was a reversal to the downside. Then now that means the first lower high would be this. Another lower high would be that. This is another lower high, right? So we have 3 major ones, right? So we are supposed to pick any between those and draw our line on. So we can decide to pick any of those. So let me see. I can decide to say, okay, I'm gonna connect this. I can decide to connect my high to any of the lower highs, or I connect this. I can decide to pick this. So I have my higher high to my lower high. Then I just extend this to the future, right? So I've done that. So that is the reversal point. So I connect it there to my lower high. If I had another lower or something here, I would also connect it. But now I have the major one, only that. So maybe the others, this other one can be mini movements that will be captured by the parallel channel. So let's see. If I extend this to the future, I have that. Okay, so that is my resistance. So I am interested in seeing how the price is going to be faring. As it approaches my resistance, what happens? It goes down. That means the next movement, once it comes here, if it is rejected, I know that it is going to continue down again. But if it comes and breaks above, and then it retests, that means the price has reversed. But in the look of thing, it is still on a downtrend. For a breakout to happen, that means the candle need to come to my resistance, opens from below, close above. The next one should open from above and close above. Then I can say now the price is ready to go up. That will be a reversal. But at the moment, we are still on a downtrend. So we have drawn our resistance line. The next thing we can do is we can draw a channel. So because I used a parallel channel drawing tool, I'll just tap on it and the middle part will appear. Then I drag on the middle part downwards. This time I am connecting the middle, the line being dragged down will be my support. So my support, I'll be making sure that I connect it to the lower low. Any two major lower lows, or even one will be okay with me, because the most important thing there is I have already captured my resistance line very well. So even if this other line comes and touches only on one, it is okay, because it is a channel. So I'll drag it down and I make sure it touches on any one, and it has done. So I've selected this lower low. Now I have a perfect channel monitoring this downtrend. And indeed, if you see, it's perfect very well. It is really perfect because, hey, it's super. It is going to help me monitor how far this trend is going to continue. Now, in this movement, I know this is what I expect, that the price will move in that. You're going to have, you see, this is a mini resistance here. It is acting as a mini support there. This is the major support. That is the major resistance on a downtrend. We are monitoring. What am I looking out for? I'm looking out for a breakout. When the green candle will come above this point, open from below and close above it, then a confirmation candle forms, and then, I have a retest. That will be a trend reversal. That is the only point I will say the trend has come to an end. Now it is reversing to the upside. So I draw this and save it on the chart, and I will be checking on it time and again to just see how far my candle has come or is trading within my channel. And as I'm doing that, I'm looking out for two things. Is the trend still continuing down, or I am coming to a point of a breakout? And if it is a point of a breakout, I become more attentive. I wait for what happens here. If it is confirmed, that means I can enter and enjoy the ride back up, because the price would have come so far. From there, now we are here. So I have to make sure I enter and ride back up. All right. So that's how you draw this trend line. Now, if you go to a lower time frame, now, okay, the rules of drawing this trend line is that you draw it on a higher time frame, and then when you want to make entry, you make entry in a lower time frame, right? You make entries in a lower time frame. Why? Because there are other opportunities you identify in the lower time frame that may be hidden in the higher time frame. Okay, but the big picture is the analysis you're doing is able to give you a picture of what is happening in the market. And like, for example, if you take this as a mini support point, which is supporting this price, like we are seeing through the formation of this bullish candle, you can tell that if I enter this point, my take profit will be, my take profit will be at this resistance, right? So that means you can measure that distance from your, if you love entering at current price, you enter from there and then take profit to the resistance line. You can decide to do that. You take profit to your resistance line. Okay? That is one thing you can do. Take into the resistance line. Now, when you go to a lower time frame, like 15 minutes. Wait, now going to a lower time frames helps you do two things. One, it helps you identify early entry opportunities. Two, it also helps you to identify some of those possible mini resistance points, the areas you think may cause or may pose resistance to your take profit, you know, to the price rising, which will affect, of course, your take profit. So you want to identify them, those mini resistance points. Like in this case, you see here, it was hidden. But from the look of thing, if you check on it and magnify, you realize that the price is here, is at this point. But if you're to check this point, is a resistance area. And if you draw your horizontal line there, to there, you realize that it is a key one. You can also not take it for granted. It's very important also. You cannot take it for granted. See? You see how the price reacted to it previously? It reacted to it here. Reacted to it here. So that means it is key. You cannot take it for granted that much as your take profit is 2%, there's a possibility that the price, as it is in the process of rising, may encounter resistance somewhere here. Here. So meaning as a trader, if you are thinking of 2%, you can first of all target a smaller take profit. Hit that. Once it goes up successfully, well and good. But if it doesn't, yeah, that means you'd have first of all taken whatever you have taken and wait for the market price to retest before it breaks. Okay? Yeah, so it is very important, very, very important that you do that. Yeah. All right. So basically, that is how you draw these trend lines, how you identify entry opportunities on the chart. And I believe now you know why you are supposed to draw these trend lines. You know why you are supposed to monitor the trend line, right? You know why. Save this. Honestly, you will be, and you come and check on it later. You would see what would have happened already. What will have happened. So it is very important. If you can draw this and save it on the chart, come here, save it. It will help you a lot. You may not be doing much now, but other than just following up on what the market is how the market is faring. Because when you're drawing these lines, make sure that you don't force it. All right. Thank you. Thank you very much for Manchester United. I think we have come to the end of our class. If there's any question before we end, please let me know. In case it is not there, it is already 6 minutes past 9. We may stop there. We may stop there for today if there is no question. So let's catch up in our next class. It's been a pleasure having you guys on board. Let's keep learning. And I know the best is yet to come. So let's continue. Thank you very much. All those who are in attendance, sparing some time to come to class is important. You know, most of the times people don't love learning. They think they must get everything on a silver plate. But it's unfortunate. This is not return on investment. This is real trading. Your skill pays you. If you don't have it, that means you miss money. So the more you have it, the more money you make. So that's it. And that's life. Yeah. So somebody's asking asking about the app. This is a TradingView app. It is called a TradingView app. A TradingView is an application that was developed solely to monitor financial instruments. Yeah, the market. You can use it for monitoring the price movements of stocks, forex. Can use it for monitoring commodities. You know, so it is very important. Even in crypto, helps a lot in analyzing the markets of these financial instruments. Yeah. Alum, what is your question? You're saying I handle your question. What's your question? Yeah, okay. Yeah, I think I'll teach you how to use the trading view. Don't worry. I'll teach you how to use the trading view. Alum, what is Aluma? Is it Aluma? Aluma? What's your question? I don't know. I don't know your question. Aluma. Aluma Ahmed. About take profit percentages. What about take profit percentages? Okay, maybe in our we shall handle that exclusively during the question and answer session on Saturday. I hope you'll be there, because there is where we handle question and answer. You ask, we handle there, and then we ask, we handle there, and then yeah. So maybe let it come to that. Let it come on Saturday. All right. Yeah. All right. Have a blessed morning.